Hello, Oracles! Oracle Tim here from Oracle Investments. Another wonderful green day today. The Santa Claus rally continues. This is looking great. Many of you took advantage of the nice low prices we had over the last couple of weeks, and now you are reaping the benefits of it. I hope you're all happy with yourselves with your choices. I know some of you have already said, I wish I bought more. We're going to discuss a little bit about that today. But I don't think you're missing out too much. I think even if you got in now, we have a long way to go up. So I still think you're going to be fine. But there's a few little things I want to discuss today about that. So at this point, we see what might seem to be a rally coming. And I certainly do think it is coming for sure. We'll know more next week if this continues and we keep on rolling this way. While we will have some ups and downs and volatility, I do believe that by the time we hit Q4 earnings, the stocks across the board, for the most part, will be much higher than they are right now. So, with that said, take a look at the stocks that you've got and say, all right, between now and Q4 earnings, what stocks do I want to own? What do I think is at a good price right now that will net me the best ROI going into the end of the month of January? That's when Q4 earnings start. I'm not a short-term player. I play things long-term. So again, if you see things at good prices now, get them and buy them long-term. But if you're looking for something like maybe you want to get in, make some profits and get out, this could be something that you can take to your advantage and ride some of these things up, and then you can put some stops in come Q4 earnings and maybe take some profits. And this is one of the things I like to look ahead for. A lot of big investors will be looking 6 months down the road as to where they think stocks are going to be going. So what I like to do is we're clearly seeing what seems to be a trend reversal. We were in a downtrend for a few weeks. We now have broken that trend. We seem to be coming out of it. So the market always will go green. It will always go red. We always go in those fluctuations. So while we're rallying now, even if we do rally well for the next month and a half, it will go red again. How do you prepare yourself for that? So what I do is I start to look around and say, what do I have for good prices right now? What are some stocks that I could get into that I think are going to do well going to Q4 earnings? And then I can take some profits at that point and be ready for when the market softens and we go red again. So I'll have that cash freed up in order to invest when the market is red. And it's one of those things where, a lot of you have mentioned that, you're out of cash. Some of it was for good reason because you kept on buying that dip and it was great, because when you get to the bottom of that dip, that's where you want to be at the minimal amount. Like I try to keep 5 to 10% cash on hands at all time. This is the time where I want to be at 5%. I want to have as much money invested as I can because we're going to be coming back up. And then when we get to where, we're getting a little frothy and I think we're getting due for a pullback and we start to see the uptrends reversing, that's when I'll take those profits, refill my cash pools, and then wait for us to get back to a downtrend and a reversal again. And now that is a very oversimplified version of it. There's a lot more that goes into it, but the basics of you want to buy when it's low, sell when it's high. If you simply just follow trends up and down, it's relatively easy to see when trends break. Can they go in the opposite direction? Can it be a fake out break? Absolutely. Lots of different factors can go into that. But if you're doing just the basics, it has worked for me. My portfolio is up 32% year to date. So that's the way I had been doing it all year long. We all make mistakes. I made some wrong plays. I took some losses on things, but overall up 32%. I'm pretty happy with my gains for the year. And one of the reasons I think we're going to do well into Q4 earnings and then come out of that and maybe getting into mid Q1, getting to the end of Q1, we're going to start to see the turnaround. A lot of that is going to do with interest rates going up. Every single time the interest rates go up, the market has uncertainty in it and it comes down. Will we hit bear market? Will we hit a recession? I don't know. A lot of other factors go into that. Supply chain issues are one of them. And with the supply chain issues, I have a friend who works in logistics and he works on the docks. He said they've been obviously backed up like crazy with shipping containers. Well, apparently there was a mandate put out there that said, hey, you're going to get charged $100 per day per container for everyone that sits here. And all of these companies who before had no way of getting these things taken off the docks magically found a way to get these things taken off the docks. So that little bit, I think, is going to be enough to coerce the supply chain issues to maybe alleviate. Hopefully that will come and move things a little bit sooner. Maybe we'll see the supply chain issues alleviate in spring. I don't know. But hopefully with this $100 a day fine that they're getting hit with, maybe that'll speed things up. And as we have discussed before, having cash flow is an outstanding way to get yourself in these red times to be able to buy those dips. And if you have excellent cash flow coming in, even if the dip keeps on dipping, you can keep on buying. That's the most important thing, and that's why having cash flow is so vital. Because again, the wise investor is prepared for this. They have cash flow coming in, they prepare for the market to be pulling back, so they've got the stocks that they know that they want to sell out, take those profits, and be able to reinvest them once the stock market comes down and hits a red point. And some of my favorites that I like over the next month and a half that can go up, that I think I would buy into to take profits on would be SoFi, Palantir, Square, Affirm. I know they've got regulation things that are possibly coming out, but I do think that they're going to do well. And now some stocks that you guys had asked me to go over, and it plays well into our cash flow discussion, would be TRTX. It's at $12.74 right now, pays 24 cents a share quarterly on dividends. It's a commercial real estate finance company. There's a lot of good stuff that comes with finance companies. There's another one on the list. It's a REITs. REITs is Real Estate Investment Trust. And these are pretty good. I mean, real estate stuff, high dividend paying funds that you can get into. So, you know, the housing market has been doing really, really well lately. Whether that's in a bubble or not, I don't think so. I think we're going to be perfectly fine, at least in the short to mid-term for the real estate market. So these could be good ones to get into if you're looking for something for the dividend play to get yourself some cash flow. O Realty is the next one. Ticker symbol is just O. And at $69.22, that one pays 24 cents per share on a monthly basis. A lot of REITs do pay on a monthly basis. And correct me if I'm wrong, I think I've seen more monthly basis REITs dividends than quarterlies, at least from what I have seen in my experience. So yeah, REITs are good to get into. Just check on a lot of these ETF funds that have dividends. There's some fees that are attached to it, so make sure that the fees work out in your favor, because high dividends are great, but if you're paying a lot of that back in fees, it's not going to really matter. And then there's VGT. It's a Vanguard Infotech. Now, Vanguard's, if you're not familiar with them, Vanguard is a very, very good, solid fund that a lot of people put their money into. So, very strong fund. Some of them can be a little bit pricier. Like, for instance, this one here is $446.49. So, you know, it may be on the higher end. Maybe you can get in, maybe not. But, I mean, it's got 82 cents per share on a quarterly basis. And it's got Apple, Microsoft, Nvidia, Adobe, Visa, really good blue chip stocks that are there. So great funds to get into. There's a lot of different Vanguard ones out there. You can look them up, take a look at their portfolios, see which ones appeal to you, and then go ahead and jump yourself into one of them, because I do really like those. That's like if you have like a 401k, or if you want to put it into an IRA, that's where I would put it. I don't have them in my main portfolio. My main portfolio is more for individual stocks. And so two individual stocks that were requested was Iron Mountain. I know Iron Mountain because one of my previous employers would have the Iron Mountain truck show up to work every day. I thought it was they were delivering water, until I realized that they were taking away all of the documents that we had that needed to be disposed of. They took them, shredded them properly, and took care of that. And so they do a lot of that type of work. So the stock right now is at 51.30. It's up, or it's down 0.64% on the day. And they do pay dividends as well. They pay 62 cents per share on a quarterly basis. So a good stock to get into. I don't think they're going anywhere. They're a good, solid company. And then Tesla had another outstanding day, up 5.76% to $1,067. Doing really, really well. Loving these moves on Tesla, and I'm sure all of you guys are loving the green as well. But I did notice something. There is another gap. The gap is between 939 and 963. Now, gaps do not have to get filled, but 9 times out of 10 they do. Does it have to? Again, it doesn't, but it's something I'm monitoring. So some of you guys, are asking, hey, are we gonna get back under 1,000 again? Again, I don't know. It could be that 1 out of 10 times that we do not fill this gap, but 9 times out of 10 it does, and we know that in the next 2 weeks there could still be a little bit of volatility in the market. So if it pulls back, it might pull back to that before it climbs back up again. Or it could just keep running. Honestly, don't know either way, but just be mindful of the fact that that gap does exist and could potentially get filled at some point. And now we did see about the same amount of trading volume today that we did yesterday. So it would definitely be interesting to see if Elon completed his final sale today. Just checked, no Form 4 filings yet. So if they do get released tonight, I'll let you guys know in the morning. But the movements today was very similar to yesterday. So maybe it happened, maybe not. Again, I'll keep you guys posted on that one, but volume is creeping up. Looks like there's some big money coming in, pushing the stock higher, which is great to see. So I feel confident definitely that Tesla is going to have a very strong rally into Q4 earnings. Let me know in the comments below how far down the road you're looking. Are you looking 3 to 6 months down the road to anticipate any fluctuations in the market, to make sure that you're prepared for any high points and low points in the market to be able to capitalize on those? And let me know if you think Tesla's going to fill that gap between 939 and 963, or do you think this is going to be that 1 out of 10 times that the gap does not get filled? Thank you all so much for watching. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am on Twitter. I try to post everything regularly that I can there because it's faster for me to get information to you on that than through YouTube. So follow me there. Otherwise, I will see you guys in the morning. Have a great one.